They were saying that the gig economy would be a boon for Wall Street, and yet gig economy companies have contributed to most of the slots in the top 5 worst performing IPOs this year.
Xbox, Twitter, Uber, Postmates, Netflix, MoviePass, Google, Facebook, eBay,
DoorDash,
Apple, Amazon, Airbnb,
The Apptrepreneur. Hello everyone, this is Kevin the Apptrepreneur, and if you have never been here before, click that subscribe button real quick, ring that bell for future updates if you happen to like this video. With that obligatory self-plug out of the way, let's get on to the main topic. Now, we have talked about the stock market quite a bit the last several months, primarily because Uber and Lyft went public, and we talked a little bit about WeWork a few days ago. Well, here's the thing. I have to always preface this, none of this is financial advice. I do invest in stocks. I have quite a healthy stock portfolio. However, I have bet on some stocks, some that will not be named, but, well, they'll be, visually, that have not really worked out very well. And I've also invested in a lot of stocks that have done very well for me. So this video is not actual financial advice. There is nothing to say any of these stock companies that we're going to be talking about, or any of the companies whose stock we're talking about, I should say, will at some point bounce back. It's totally possible. I always like to share. Facebook came out, and it came out like a dog. It was going to go away, and now it's one of the best stocks on the market right now, to be quite frank, despite what I think about the company. Well, anyway, Markets Insider, which is a division of Business Insider, has actually put together a list of the 5 biggest flops and failures this year when it comes to IPO, which is their initial public offering. And as you can see right from the get-go, Peloton is the latest. Now, what is Peloton? Well, Peloton is a connected fitness startup which makes indoor bikes and treadmills and streams virtual exercise classes, and was seeking a public valuation of $8 billion. So basically, it's what you see here. You could actually stream a fitness class in your room. Now, I can already kind of tell you up before even reading any further, because I haven't looked at this, of course, just to be transparent. I can already tell you what the first problem is like a lot of people don't actually have exercise equipment. They don't. I know when I get a house, I want to have an exercise room, because me and Katie both go to the gym. We actually use our gym memberships. But I think the most people usually do is they will buy a gym membership, and then they'll go for a few times after the beginning of the year, kind of get things started, and then life just gets too busy at that point, and then they stop exercising and they go back to eating pie. Well, this was kind of like, hey, people want to exercise, well, let's take it into the home, but you need to have expensive bikes, or maybe they provide these bikes. Now, I don't know. I haven't actually looked at this. I know I don't currently have room for this thing. But here's the thing. Peloton more than doubled its sales to $719 million in the year to June 30th, but its operating losses roughly quadrupled to $202 million over the same period. Its IPO following showed. Even with its rapid top-line growth, investors may have shied away from valuing the company at more than 11 times its revenue. The next one, we've been talking about this one a lot, WeWork. WeWork shelved its IPO at the last minute due to a lack of investor interest and, losing a lot of money. By the way, something I forgot to mention when we talked about it, they're selling the company's $60 million luxurious private jet that Adam Newman and his family personalized and used to fly over the world. This is a little side story, but here's the thing. WeWork is selling the luxurious plane that its co-founder Adam Newman used to travel the world, a symbol of the company's corporate governance issues that have in part derailed its initial public offering. The company bought the Gulfstream G650 for $60 million last year. Some investors said the private plane was a corporate governance red flag in the lead up to the company's IPO, according to a source familiar with the matter. On Tuesday, Newman said he would step down as WeWork CEO, saying the intense public scrutiny of him was a distraction. So here's the thing. The company was spending $60 million on an airplane, and I can't get a decent raise. I felt like it was we over me, unless me was Adam, and we was Adam, one middle-level employee said. So, yeah, obviously they're going to want to cut expenses. So, this one technically didn't even get the IPO off the ground, but we all know that WeWork is not working. It's losing a lot of money, because originally WeWork was targeting a public valuation below $20 billion, less than half the $47 billion it was privately valued at in January. And here's the thing. Newman's reported raising of $700 million by selling and borrowing against his WeWork shares, allegedly smoked weed on a private jet flight from New York to Israel, and has behaved in other questionable ways that tempered investor interest. So anyway, he's been replaced, so WeWork, that's pretty much a bust. Endeavor, I've never heard of this one, but Following Peloton's week debut, Endeavor scrapped its IPO a day before it was scheduled to take place. The owner of the Hollywood talent agency WME, media giant IMG, and mixed martial arts body UFC originally planned to raise more than $600 million. It dropped its price range from 30 to 32 to between 26 and 29 a share, and then pulled the offering entirely a few hours later. I don't actually know what Endeavor is. I guess they don't really tell me. But anyway, here's the one that you all want to know about, Uber. Yeah, Uber is considered one of the top 5 busts of the year. Uber shares slid more than 7% on the day of its IPO in May and have fallen more than 30% to trade around $31. And by the way, when you're watching this, it might be even lower. The ride-hailing giant has tried to appease concerns about its toxic culture by replacing CEO Travis Kalanick with Dara Khosrowshahi. However, it's mounting losses, media reports of crimes occurring in its cars, and mounting regulatory pressure to treat its drivers as employees instead of independent contractors have weighed on its stock. Uber's revenue grew about 17% to around $6.3 billion in the first half of this year, according to its latest earnings report. However, it posted a net loss of $6.3 billion. So, you know, yeah. Oh yeah, you bring in $6.3 million, you lose $6.3 billion. I know it's not exactly like that, but you know. A sharp swing from its net income of $2.9 billion in the same period last year. The group's market capitalization of $53 billion values it at close to 5 times revenue and more than 50 times net income last year, meaning it's still aggressively valued despite its stock decline this year. And then Lyft. Of course Lyft was going to be on this. So Lyft listed its shares at $71 in April, and then, well, it basically took a beating. It dropped about 40% to about $42. And again, as you're watching this, it might actually even be lower than that. So here's the thing. Lyft grew its revenues by 82% to $1.6 billion in the first half of this year, but its net losses soared more than fourfold to about $1.8 billion, according to its latest earnings report. Regardless, its current $12 billion market cap values it at more than 6 times revenue, an aggressive valuation for any company. Now, that's the last one. Now, what do all of these companies have in common? Well, let's see here. Peloton apparently loses money. WeWork, we know, loses money. I don't really know anything about Endeavor. In fact, let's actually look at what Endeavor actually is. I'm kind of curious now. Let's see here. Well, so far, let's try this. Let's try Endeavor Company. Okay. So, official website. Let's see what we can get off the official website for Endeavor. This is Endeavor is the high impact entrepreneurship movement around the world. Endeavor's global movement is transforming economies one entrepreneur at a time. Endeavor's entrepreneurs continue to transform their communities, create quality jobs, inspire future generations of founders. Endeavor has set out to create support systems for high-impact entrepreneurs with an unparalleled global... I don't know exactly what this actually has to do with anything. Like, I mean, this comes a little closer. Endeavor Insight... See, this doesn't actually tell me what this company does. So, I just don't know. But if it's dealing with entrepreneurship, let's just assume it loses money. Just for the sake of argument. I'm assuming that's why it's on this list. And then Uber loses money. Lyft loses money. This is the problem with the market right now. Investors are betting their house and their farm on these companies that don't make money. And we can't do this forever. Yes, it worked with Amazon. I know it worked with Amazon. It was like, hey, that was a great thing. And it kind of worked with Facebook too. It doesn't mean it's going to work every single time. It didn't work for MySpace. It didn't work for that, I forgot what that company, it didn't work for MoviePass, that's for certain. These companies need to make money before they start going public, and they're not doing that. And it's, Uber's especially that's the big question mark on here, because I obviously know the most about this company. I know a little bit about this one. But yeah, look, there's no reason for this company to even be valued off the books at $50 billion when it's not profitable. So, yeah, the lesson for this is that, well, there's a couple lessons to take from this. First of all, Just because it's a great idea and just because a lot of people have the service doesn't mean it's profitable. Therefore, it doesn't mean it's going to do well in the stock market. And just because you can go public doesn't mean you should go public. I also think this is why companies like Postmates and DoorDash are kind of holding off on their IPOs a little bit. It's like, well, let's hold back a little bit. This might be a mistake. I believe they will go public at some point. I believe they will. But this is just, yeah, we've got a lot of companies right now that are trying to go public, and they're just not. What the heck does Endeavor actually do? I'm going to have to actually look that up later on. I know what they do, and they're not doing very well at it. This sounds like the one that would probably have the most chance of success, although it seems like it would definitely appeal more to rich people. But anyway, we're going to end it there. Do any of you have any of these stocks? Do you plan to invest in any of them if they become available? If not, why? Comment below, and like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly, and you get access to my Patreon's exclusive blog. Also, if gas prices get inches a little down, check out the Get Upside app below. It's totally free, but you get cash back on every gas purchase. If you want more content from me that's not, well, economy or rideshare related, whatever, check me out, Kevin T. Rodriguez, the Apptrepreneur Vlogs, and Autograph Hound. And finally, if you want to talk to me or any other people who watch this channel, check us out at the Apptrepreneur Hangouts on Facebook. And as always, flame responsibly. Have a good one.